But let's connect with the management of TeamLease Services. For Q4, the company witnessed a steady top-line growth while the specialized staffing slowed down in Q4 after a double-digit growth in Q3. Ramani Dathi, the CFO of TeamLease Services, joins us now to talk about that. Ramani, thanks a lot for joining in. Appreciate your time here. You've had a steady revenue growth of 20% on the top line. Do you think this run rate is something that will be maintained in FY25? And what are the growth triggers for the company now?
Definitely. The 20% top-line growth for us is largely driven by the general staffing business. And there, the hiring momentum is very positive across segments like FMCG, FMCD, e-commerce, telecom, manufacturing now. So there, comfortably will be doing upwards of 20% growth on volume, headcount addition, as well as gross revenue. Where we are seeing headwinds is still in IT staffing. We are not seeing any recovery, indication of any sort of recovery at this stage in IT services. So that may continue to impact on profits, but on top line, since the contribution from IT staffing is minimal, that may not impact the 20% that we are confident of.
Okay, so you're saying that specialized staffing, so IT staffing is under pressure, but general staffing is still picking up. I know it may be hard for you to call a recovery in IT staffing, but can you see IT hiring pick up either in the second half of the year, in the first half? Any indications of a timeline?
That's, as of now, it's just a hope statement because, as I mentioned, at this stage, we are not seeing any indication. But again, it looks like second half of 2025, there can be a pickup in IT services. GCCs and non-tech companies are still hiring. So to that extent, we are able to maintain the run rate of our revenue in specialized staffing business. But in terms of net growth, we need the pickup of hiring in IT services, which drives the maximum volume of IT hiring.
So if IT, okay, by the way, that's the Go Digit IPO listing that's happened. Decent listing there, 4.5% higher. So we'll talk about that in a bit. Go Digit General Insurance IPO listing happening. That's the latest one on the Lal Street. But we'll talk about that. Ramani, since IT, there is no clarity on when things may pick up. Do you think that could put pressure on your margins? Because even in this quarter, right, there was that wage hike impact and perhaps that may get extended into Q1 as well. Do you think, given the slowdown in specialized staffing, further margin pressure is likely?
That's right, because for us, specialized staffing is the highest margin contributor. And while with staffing growth, we are driving productivity and operating leverage. In terms of overall group level margin expansion, we really need the specialized staffing contribution to pick up. And again, on top of that, NEEM withdrawal scheme in our apprenticeship program has impacted profits to the tune of about 20 crore spread over multiple quarters. However, Q1 is the last leg with which we'll be fully done with the release of NEEM trainees. And hopefully from Q2 onwards, we can see consistent improvement in the margins overall.
Okay, so when you say consistent improvement in the margins, I mean, it's still at sub 2% margins. Any thoughts on what the band could be once the improvement begins?
We are targeting 5 to 10 basis points quarter on quarter. But if the IT hiring picks up, it can get further accelerated.
Okay. And in generalized staffing, you're saying that that has picked up, but any election-related impact that you see, how is Q1 and Q2 expected to pan out?
Very marginal impact on, especially in tier 2, tier 3 places, but cities and metros, we haven't seen any impact. Even in the past also, during election season, we didn't see any material impact as such in the overall hirings. Only here and there few pockets, but that's not material enough to impact the growth rates at scale.
Okay. Finally, just before we let you go, you have, what is the outlook on different sectors? I mean, what is the expectation on staffing in the metros versus what you're seeing in rural? Have you seen any kind of pickup geography-wise? Anything that you can share with us?
Yeah. In terms of overall hiring for us, metros and tier 1 cities are always the largest contributor. And a good part is from last few quarters, we are seeing good momentum in tier 2, tier 3 places as well, especially with industries like BFSI and manufacturing. So we are seeing good new open positions getting opened up, especially at the entry level jobs, the fresher level and entry level jobs. So we are seeing in small cities and towns as well, new formal jobs getting created. So that's a very positive sign. And even otherwise, for the verticals like FMCG, FMCD, there is an increased drive for formalization. So some of the jobs that we have added during the year, especially over the last 5-6 quarters, are not new jobs, but these are more of consolidation and also the shift of jobs from informal to formal. So we believe the trend will continue into FY25 as well, and not just in FMCG, FMCD. Across other verticals, we are seeing this preference for more formalization of jobs, which is good for companies like us, organized players, as well as for the overall employees.
Okay. And finally, the headcount addition for FY24 was around 13%. What's the expectation for FY25?
Yeah. Within staffing, it's actually 20%, but that got offset with the headcount loss we had in NEEM program. Net of that, it came to about 13-14%. But since we'll be fully done with the NEEM loss in Q1 of FY25, even on headcount growth, we believe for FY25, we can maintain upwards of 20% growth.
Okay, Ramani, thanks a lot for joining in. That is TeamLease Services talking about how general staffing is picking up, but specialized staffing like IT is still under pressure.